Sarah Marinan here from Keller Williams, and I asked Tim from Leader One Financial to come over and talk to me a little bit about interest rates and qualifications and what's happening in the market as interest rates rise and how it's affecting buyers and sellers due to affordability. So it all started because I had a bunch of people who were looking for homes last summer, last fall. They just weren't finding anything and they got frustrated and they quit looking. And now they're starting to want to look again this year. You know, they've gotten their britches back on and they're ready to go out, but interest rates have gone up.
Mm-hmm.
And so that same kind of median 250 house that they were looking for last year is costing them more. I mean, all prices increasing aside, just on interest rates alone, their payments have gone up, and in some cases they qualify for less of a home now. So I asked him, based on some scenarios that I put up here, to kind of run us through how the rising interest rates affect the payments. So I started with 250 because that's the median, a little bit higher than the median house price in Minnesota right now. And a lot of people aren't having big down payments right now, so I just did a 5% conventional down as a scenario. And Tim's going to talk about last year when my people were looking and they had a 4.25 rate. Now they're seeing a 4.75 rate on that same loan and where it potentially could be by the end of the year or early next year. Let's hear it, Tim.
Yeah, let's take it away here. So 5% down on $250,000. It gives you a loan amount of $237,500 for a loan amount. And so principal and interest portion of that at a rate of 4.25 there gives you 1168. Then we're gonna just estimate that your taxes.
Yep, taxes and insurance.
Taxes are gonna be about $250.
And we're not talking association dues.
Yep, so this would be priced a single family home.
Yep.
So we got taxes of about $250 a month. So I'm gonna go $250 there. Insurance of $100 a month.
Like that would be your homeowner's insurance.
Yep, and then $81 a month there for your mortgage insurance because you're not putting down a full 20%.
Right.
So in total there, you're looking at a payment roughly of $1,600 even for that whole thing. I rounded up just a tad, but it's easier to round up. And so $1,600 at 4.25 last year.
Right.
So now we fast forward to around this time this year, we're looking at a payment of about $1,239. Going to use that same estimates of the 250, the 100, and the 81. And so there in total, we're at about 1673 roughly, something like that. Let me check my figures here quick. Sorry, 1670 even. So that's around right now if we're not playing discount points, stuff like that.
So last year, the same clients that were shopping for this 250 house at a 4.25 interest rate, we're looking at about a $1,600 monthly payment. And now, because interest rates have gone up by no fault of their own, at a 4.75, that same house is $1,670 a month for them. So let's say they decide to wait some more and interest rates go up another half point. Now what happens?
Yeah, great question. So then we go up to $1,311 a month for the principal and interest. We got the same 250, 100, and 81. So in total there, we're looking at about $1,743. Again, we're rounding up about $1 or $2, but there you can see a significant
So just the principal and interest. So just paying for the house and paying the interest on your loan is having this jump from 1168 all the way to 1311 in just about a year and a half, probably.
Yeah.
And so when those things happen, it puts pressure on the market, right? And it's going to put pressure on home prices a little bit too. So we may not see this house continue to rise in price as quickly as they were before, but the buyers are still going to be struggling as the payments go up because the interest rates are going up. If you look at it from a total principal, interest, taxes, and insurance perspective, it's gone up $143 just to go from 4.25 to 5.25 interest rate. Just a 1% difference in the rate has jumped it $143 in the payment. So just kind of some things to consider, you know, as you're balancing out, should I buy now? Should I wait till later? What's kind of happening in the market? Any thoughts, Tim, on, you know, like would it be worth waiting just because of payments or down payment or anything else they should think about?
Yeah, it's a great question. Everybody's going to be
Credit.
different.
Yeah.
Credit sometimes is an issue. We want to get that cleaned up. Saving for a down payment is a big thing. The less down payment you have, the worse your credit is, the less options you have, period.
Right.
And then those payments actually even go higher.
Right.
And so sometimes it is worth it to get all your ducks in a row. Meet with somebody that, like us or Sarah, or get in touch with someone that's going to know and can put you on a plan to get there in 3, 6, 9, 12 months.
Yep.
Hopefully the rates stay the same. We know they're probably not going to and probably go up. However, you got to find what's right for you.
Yep.
And so we're out here just to educate people.
Yeah.
We both are
So this
to
was
help.
just a scenario for one of the clients that I had. You know, this was the rates that they were working with, and so Tim was kind enough to run those for me. You're going to want to call a mortgage planner or somebody like Tim and have them run your specific rates for your current credit and down payment and those things. Maybe you don't have 5% down, maybe you have more down. But we just wanted to show you what happens in a 1% difference in interest rate. It can be a big deal.
Yeah, absolutely.
Thanks, Tim.
Thanks, Sarah. Appreciate it.
Have a great day.
You too. See ya.